I'm joined live in the studio now by Ryanair's Chief Operating Officer, Michael Cawley. Thanks very much indeed, Michael, for coming in. Appreciate your time. So, third quarter loss down to air traffic control strikes, walkouts, always a bad combination for a business like yourself. Do you expect further losses in the first half as you really start to feel the effects of the wintry weather?
Well, I think it's important to understand that we expected to break even or indeed make a modest profit before the 3,000 cancelled flights which arose as a result of the harsh weather in November and particularly in December. So we were pleased generally with the outcome. Fares rose, particularly, if you like, in a slipstream effect, because high-fare carriers and other so-called low-fare carriers increased their fares, particularly with increased fuel surcharges. And our passengers migrated to Ryanair as a result, pushing up demand, and fares rose as a result. We also saw a fairly modest capacity growth of only 6%, which helped us to get fares up, and we had a better equilibrium between supply and demand. We don't see a repeat of, we're predicting a loss for this quarter, our last fiscal quarter, January to March, and that's primarily because there's no Easter in this particular year. There was an effective Easter in last year's comparative. We're predicting an outcome for the full year of, at the higher end of our band of 380 million to 400 million profit. Our accumulated profit for the first half was 452 million. We've just lost 10 in this quarter, so we expect to lose perhaps about another 40 to bring us back to in or around 400 million for the full year. And
unfortunately, it's not just wintry weather conditions and strikes that you guys are contending with. It's also the rising price of fuel. How concerned are you about that?
Well, we're obviously very concerned that fuel, which are our major cost input, should be increasing, particularly at the rate that it is increasing. Ryanair takes the view that we try and get certainty for a budget period by hedging forward, and we're very well hedged for the current fiscal year at about $73 a barrel.
Right.
And for next fiscal year, we have 82% of our total utilisation hedged at about $81, $82 a barrel. And we're pleased about that, particularly in the context that spot has been much higher than that recently, and with the uncertainty in the Middle East, obviously, in the short to medium term, we're very pleased to have all purchases bedded down at this stage.
Price of oil?
Well, it's very difficult. We're not experts at the fuel price. We just try and take the uncertainty out of it by hedging forward, and we're pleased to be in that position given the volatility that's there in the background.
Are we getting to the types of levels where we could see carriers going bankrupt, or does oil have to go a little bit higher for that?
Well, we've been here before. I mean, a lot of airlines are very fragile financially. Ryanair has the highest margins in the business, the lowest fares, and we believe the best business model, so we're in the best position to withstand this, and with the certainty that the hedging gives us over the next 12 to 15 months, I think we're in a uniquely strong position to take advantage of the weakness that our competitors inevitably will encounter, you know.
You've been talking with Boeing recently, right?
Yeah, I mean, we're in conversation with all the aircraft manufacturers, Boeing, Airbus, and some Russian and Chinese manufacturers. There's a very, it's truly a global market now in terms of supply.
On fleet expansion versus paying a second dividend?
Our thoughts on fleet expansion are, if the price is right, we will expand. If not, we'll retain cash and do other things with it, like paying a dividend, which are for the benefit of our shareholders. Ultimately, the input price of aircraft, like all our cost inputs, has to be right and justifiable. And right now, we haven't been able to achieve such a price with our aircraft suppliers.
When do you think, if you decide against a new aircraft order, when do you think you might pay a special dividend? Some analysts say that you could comfortably fund €500 million dividend by 2012, given the cash that you're generating. Do you agree with that?
Well, happily, the analysts don't run our business, so we've got to take other things into account. What we've said historically, and we're still saying today, is that if profits and cash flow continue as expected, and we don't place an order within the next 18 months, that we will pay another dividend by sometime in 2013.
Well, Michael Cawley, Chief Operating Officer for Ryanair, good to talk to you. Thanks very much for coming in.
Thank you.